Will there be a recession in 2025? Here's what you need to know. While no one can predict the future with certainty, here's what experts are saying and what you should watch out for. The likelihood of a recession in 2025 depends on several factors: global economic trends, central bank policies, and geopolitical events. Economists closely monitor key indicators to assess the risk. One of these is interest rates. When central banks raise rates rapidly to control inflation, it often slows down economic growth, increasing the chance of a recession. Another important indicator is the yield curve inversion. This happens when short-term interest rates exceed long-term rates, and historically, it has been one of the most reliable signs of an upcoming recession. Global economic growth is also a critical factor. Slowdowns in major economies like the US, EU, or China can destabilize the global economy and contribute to a broader downturn. Corporate earnings and layoffs are worth paying attention to. If companies start reporting declining profits and layoffs increase, it's usually a sign of economic trouble. Additionally, consumer confidence plays a big role. When people cut back on spending due to financial stress, it reduces overall economic activity. Finally, geopolitical risks like wars, trade disputes, or pandemics can disrupt supply chains and destabilize economies, pushing the world closer to recession. Looking ahead to 2025, there are specific factors to watch. Central banks, particularly the U.S. Federal Reserve, could continue raising interest rates if inflation remains a concern, which would put additional strain on economies. Rising global debt levels are another issue, as high interest rates make it harder for countries and corporations to manage their debt. China's recovery will also be critical. Its economic health affects global trade and commodity markets. Lastly, energy prices are always a factor. Large fluctuations in oil and gas prices can drive inflation and affect consumer spending. The outlook for 2025 remains uncertain. Some experts are optimistic, suggesting that if inflation stabilizes and central banks ease monetary policies, the global economy could avoid a recession and maintain moderate growth. On the other hand, a more pessimistic view suggests that persistent inflation, high interest rates, or unexpected shocks like conflicts could push economies into recession. The best way to face this uncertainty is to prepare. Start by reducing your debt, building an emergency fund, and diversifying your investments. These steps can protect you financially regardless of what happens. Stay informed by keeping up with recent economic reports and expert insights. Whether or not a recession occurs, being financially prepared gives you greater control